We don't believe that there are systemic issues in the financial system. I mean, the financial system today is much better regulated than it was before the global financial crisis. Yes, there have been failures, and yes, we need to review precisely what happened and why, but regulators have responded swiftly, and fundamentally we believe that the financial system is resilient, and that there were specific reasons in those particular circumstances for those failures, though as monetary policy continues to be tightened to get inflation under control, it will increase the risk of exposing vulnerabilities, and this is what's happening with stretched valuation of assets and indeed high levels of debt exposure. I mean, there is a risk that is related to the necessary and unavoidable monetary policy tightening.
Would you say the risks to the growth outlook are to the upside or to the downside right now?
Well, I mean, the outlook remains fragile and the risks are tilted to the downside. But having said that, our outlook is slightly more optimistic now than what it was towards the end of last year. I mean, business and consumer confidence is up in key economies, including the United States. Growth has proven to be more resilient than expected. Consumer spending is strong. Labour markets are tight. Inflation remains too high and is coming down too slowly, and so there is still significant work to be done on that front, and there are downside risks, including and in particular related to the ongoing war in Ukraine and intensifying geopolitical tensions in other parts of the world, notably in relation to China and Taiwan.
Yeah. One of the conclusions from the World Economic Outlook from the IMF is, despite all of the obvious shocks to the system that we've talked about, central banks should continue along the path of tightening monetary policy and attempting to defeat inflation. Is that what OECD stand by as well?
That is 100% what we're saying. The number one priority is to get inflation durably under control, to get inflation back to target. That is the overarching priority. But of course, we need to continue to monitor financial market developments in the process, and to make sure that we monitor all of the related risks. I mean, one of the difficulties is it's very challenging to precisely gauge the impact of monetary policy tightening on a week-to-week basis, and I mean, there are risks associated with the necessary monetary policy tightening that is taking place.